Alibaba is one Michael Burry stock down 70% that I think you might regret not buying on the dip here. That's what I'm going to talk about in this video. Of course, Michael Burry gained his fame by correctly predicting the housing market crash in 2007, 8, and 9. And now, when he makes predictions, investors listen. Investors listen, and investors are very curious about what Michael Burry is doing in his portfolio. Of course, in its most recent update, Michael Burry only had 9 stocks in his portfolio, one of them being Alibaba at 9.46%. 9.46%. Michael Burry also owns JD.com at 9.05%. So Michael Burry, it looks like, is betting on the economic reopening in China to spur growth in the region, which will result in booming results for these stocks that are reliant on the Chinese economy. What I have here is Alibaba's latest financial update as of December 31, 2022. You could see that Alibaba across the board here, this is the revenue of its all of its businesses, and overall it had about 30. Let's go RMB 247,756 RMB. Of that 247,756, 169,986 came from China commerce, right? And then if you look across the board at its income from operations, the vast majority of its income from operations comes from that China commerce segment, 53,127. So the Chinese economy is extremely important for Alibaba, and the reopening and the increase in commerce in the region is going to be good news for Alibaba. Of course, the stock is already down 70%, and that's understandable because of the headwinds in that economy. But now Alibaba is trading at a forward price to earnings ratio of just 10.87. Just 10.87. That's just about as cheap as this stock has been going back 2.5 years. You have rarely had an opportunity to buy Alibaba stock at this cheap of a valuation. So Michael Burry is likely seeing an opportunity here to buy a stock at a reasonably inexpensive valuation that's going to capitalize from near-term tailwinds from an economic reopening. So if you look at Alibaba's revenue trailing 12 months at 128.27 billion and its operating income of 15.38 billion in the trailing 12 months. So it's a company that's growing revenue at a profitable pace, right? It's not sacrificing profits with the aim to grow revenue. If we look back further here, you can see the explosive growth this company has delivered. Of course, in recent years, as a result of the pandemic and reopening and closing and all of that, there's been some headwinds to the company as well as, pressure from the government and the, businesses in China do not have as a good relationship with their government as businesses in the US have. There's a more adversarial relationship, and of course, that adds to the geopolitical risk of investing in Alibaba stock. But I think that's contributing to why the stock is trading at such a inexpensive valuation is because of that geopolitical risk that's incorporated into the valuation here. And in fact, I think it might be overly incorporated into the valuation. I think the valuation might be overcompensating for that geopolitical risk in this case here. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Nevertheless, you cannot ignore the fact that there is an increased risk because of the geopolitical nature of this company and because of the region and the adversarial relationships, not only between the government and the business, but also between the US and the government. So a lot of reasons to be hesitant here, but Michael Burry looks like he's seeing an opportunity, and thinking that investors might be overreacting to the downside, which I agree with. I think the valuation here offers investors a good risk versus return potential. Now, keep in mind that I am incorporating the fact that it has higher risk, but I'm also saying that the return potential compensates investors enough for this risk. Enough for this risk, okay? All right, so that's all I've got for this video. I think Alibaba stock is one Michael Burry stock down 70%. You might regret not buying on this dip here. Thank you so much for watching. I really appreciate your viewership.